All right, so I hope everyone's doing well. I want to discuss a few things. Number one, I'm trading the Globe X. I bought the close of this bar. You can see where my stop is. I'll probably move it in a minute. My target's up here. Reason why I took the trade, for a few reasons. You can see now that I'm going to click on some bars and just give me a little more privacy with what I'm doing. I'm going to change it, but you can see my target's up here, stop's down here. Realistically, in a few minutes, I'm going to put my stop probably below this bar. Now I'm going to go to the continuous micro, and that was the micro contract. So this is just the continuous contract. And, as you people that trade futures know, you have a, TradeStation. I'm assuming most brokers do this. TradeStation has a continuous contract, and what that means is it will continuously roll over. It'll roll over to the next contract. So I could forever keep at, a great example is at ES. I could go to like a monthly chart and it'll forever look this way. However, if I went to the ES U19, which is the current contract, there's the monthly contract. It'll be a little skewed. So anyways, I'm long. You saw my target. We're at the all-time highs. So I'm hopeful that we will test up here. My reason for taking the trade in the first place, really for a few things. Number one, when I looked at the open, looked like a trading range, broke below these lows, turned up here. It's such a big bar, it's such a strong and versatile, it's favorite second leg. This is a micro channel, first down should fail, so I'll hold for a little bit. We're still not getting the follow through I would like. I mean, this is follow through, but I'd rather see bigger bars. This looks like a trading range. So anyways, this video is gonna I want to use this video to help answer this question. And this person's questioning the trading room. And as I later found out, after I mentioned I'd make a video, and you can read my comment, his real question isn't necessarily the trading room in general, as it more is to how do you listen to Al and swing trade when he's always talking about scalping. And the reality with that, and I know this person spent a lot of time studying Al. You can see he's been in here since October. This person has longer than I have even. And what I would say is, first, let me give you my experience with the webinar. I think it's a valuable tool because when you listen to it for so long, you eventually, and you listen to recordings, you listen to prior recordings, you listen to the video course, you eventually begin to pick up on Al's the things that he says. And you kind of start to understand his tone and his kind of way with words and what he's kind of saying. When he's saying, oh, probably buyers below here, limit order market, bears will probably sell above here, or bulls are going to buy below here. He's buying that. But when it comes to swing trading, it can be difficult. I understand this person's point entirely, and that is because I remember it being very frustrating to, let me just find an example without losing my spot, even though I already did. I remember finding it very difficult to, that's not a great example, maybe, I'll go back to that one, it's good enough. Very difficult to buy here, put a stop down here and hold, when I would say, maybe bulls get out below, but they got to get long again. And the reason Al does that is simple. So what Al's doing is, the way Al trades always in, Al is what I call an aggressive always in trader. And the best way I can explain all of this is everything Al does is derived from always in. If there's a structure, if you think of a house, the foundation of the house is kind of like always in if Al's trading was a house. And what I mean by that is, okay, think about it like this. The first thing Al does on bar 2 is figure out, is the market always in long or short? It's always in long. Okay. Since the market's always in long, I've got to switch back and forth. I'm still in this trade, and I want to kind of see things. Okay. So while it is a little disappointing, it's not enough to make me just want to exit. So I'll stay long. Let me go back to that day though. Yeah, so it's always in long. So therefore, the only thing Al wants to do is buy. So the next question is Al going to buy the close of bar 2 or buy a pullback? Well, and it's kind of the player's choice, if you will. You can do both. A swing trader, and it's all personality. So when you got to understand, when Al says, the one thing Al's talking about, he's not selling above. He might sell this high one. He probably wouldn't though, because of that, and easy to get trapped. So Al is taking a little. He's only buying, and the reality is, you're going to hear a lot of times. So let me think of a better way to explain this. You got to kind of trust. You always got to trust the video course. And what I mean by that is, I had a lot of difficulty at times. Let me just do this, it'd be easier. I had a lot of difficulty at times not always trusting what Al is saying. And what I mean by that is, there'd be times when I would think, oh, Al's, he's contradicting what he's saying in the webinar. When really, he's not necessarily, he's just not stating the obvious always. So what I would do is, obviously pay attention to the video course, and you obviously realize, okay, probably 60% chance we're gonna have a second leg up. Okay, is this second leg? Probably not. Here, probably not. Here, probably not. Here, probably not. Here, probably not. So a lot of traders. So let me back up for here. So it's one of the things I'll tell you is, it's kind of actually difficult to try to explain things when they make sense to you. I making these videos has given me just more respect for Al, and how do you explain this to people, or explain what he's trying to say. And I'm not saying I have it all figured out. I certainly do not. So don't mistake what I'm saying. What Al does is this. Al is trying to be as efficient as possible when it comes to trading, as anybody would be. So if you were to think about it like this. If I was to ask you the true always in of this day, you're going to say it's always in long. You're going to say, I'll buy here, stop down here. You'll hold the first reversal, and maybe you get out here. Or maybe you get out and, think about the most extreme always in. You just stay long and you get out at the close. Or you may say, okay, and let me give you, and what would be a more extreme always in? Well, a more extreme one would be to buy the close of bar 2. You see this, be disappointed. You get a new breakout bar, and another breakout bar, and then you see this doji. You exit, and you actually buy a couple points lower, betting that it's going to trigger, and maybe it'll try to close this gap. So if you think about it like this, I have a gap here. And if I have a gap right here, that means this gap is probably going to try to close. And if it's probably going to try to close, it's probably going to get tested more than the close of this bar right here. Therefore, I can probably buy a couple points lower, or maybe a few ticks lower. So if I buy here, I'm buying at the gap. So I could buy this close, and I'm gaining a better entry of a few points. I could say, okay, bull bar closing goes high, I'll stay long. Big bull bar. Well, bad fall through here, bad fall through here, maybe bad fall through here. And even right here, okay, best looking bull bar, parabolic, okay. Parabolic because the channel line's getting steeper. So some bulls, if they're trading always in, they will And by the way, this is deceiving. I wanted to point this out. Let me kind of talk about it first. Very tight channel. Very tight channel. So big down, big up, probably trading range. May get a deep pullback, but I do think we'll ultimately test up to here. So a really smart, as Al likes to call it, astute trader would buy here, hold long, and get out of shorts, get out of longs at this close, betting on exhaustion, and then we'll at least test down to here, which we did. And we obviously tested even in the moving average. An even further, quote unquote, astute trader would not only get out of longs at the close of this bar, they would sell the close of this bar knowing that we're at least going to get down to here and maybe even higher than a 50-50 chance we close this gap and test the moving average. So you kind of start to realize you got to take what Al is saying and also kind of apply it to your personality. And let me look at some more days. I'm going to try to build on this. Like right here. Huge bar 1, far away from the moving average. Big bar 2, big bar 3. Well, okay. Al says 70% chance we're going to have a second leg up. Well, that's generally true. But this is extreme. I mean, this is 9:11 to 9:31 in the first 4 bars. So it's a 20-point rally in the first 4 bars. Really, it's the first 3 bars because we didn't even rally on the first bar. So if that's the case, do you really think we're going to get a large second leg within the day session? Probably not, because the range is already 20 points. And then we go sideways. So maybe that was all you got. So if you're a astute trader, as Al likes to say, I use that kind of joking, but I'm not at the same time. You know the first reversal down is going to fail, so you're going to buy below the bar, buy this close, scalp out, buy here, scalp out. Maybe you won't buy the second one, but you'll buy down here. And when you get your second leg up, you're going to say, okay, probably a trading range. You know, this is probably going to end up a trading range. We're probably going to touch the moving average. So I'm going to get out. And that's what happens. So as far as your question, how do you get better at swing trading and while listening to Al? Well, the first thing I would say is trade always in. You got to really understand you got to really understand always in the sense of, hey, where do traders enter and where do they exit? So big gap down, doji. Would you buy the low of this bar? You can, but it's a gap down, so bear trend. And bear bar closing on its low. If you bought the lows betting on a low of the day, early low of the day, you get out below. And you do that because bear bar closing on its low, always in bear sell. Follow through bar, always in bear sell. First reversal up should fail. Here we have a second entry buy, but it's basically forcing you to buy in the middle of a 3-bar tight trading range, tail on top, so it may fail. If bears get out aggressive, they got to get short again. If bulls went long, they've got to get out below this bar right here. Micro double bottom, doji, 3 pushes down, 1, 2, 3. Bull bar, so big risk. A lot of traders would get out. A lot of your smart traders would get out at the close of this bar, this doji right here. Other traders would get out above this bull bar, but it's really not great because you're buying in the kind of top of a range, possibly, and probably going to go sideways. 2 consecutive bull bars with possible double top. Bulls get out, aggressive bear sell. Big up, big down, probably trading range. Strong enough breakout for at least second leg. We had the second leg. Maybe a strong enough bear bar for at least second leg down. Even though we went above it, we still got second leg down. Bull bar closing on its high, 3 pushes down, 1, 2, 3, or 1, 2, 3. You can call it a triangle or wedge. Doesn't matter. So, I can't do it for the rest of the day. It's kind of tiring to talk like that. But my point is, you got to really understand the transitions. And the way you do that is you start with the simple. So take a look at right now. Okay, what do we know about this day over here? Well, the first thing we know is we have rallied from 45 to 55. Okay, 10-point rally. Do I really think we're going to fall below this low? Probably not. Okay. So if that's the case, if I put a stop down here, I probably won't get stopped out for a while. Okay. And it's easier to visualize this. Okay. So the first reversal down probably will fail. And if that's the case, we may get a deep pullback, but we'll at least test back up to here. So if I buy this close, put my stop down here, I may shoot for the moon and, set a target up here, which is what I'm doing. And if we get a short pullback, it's always in long. So if we get a pullback that's, sideways, kind of like this, just right here, odds are we'll go higher. If we get a pullback all the way down to here, or even here, we may not go that much higher. We may just test up here and go sideways. So that is what traders do, and that is why traders trade the way they do. Here, 3 consecutive, doji for the stop entry, II. It's technically an III, so it's higher. It's a better stop entry short, but it's not great. It's like a 7-8 bar micro channel. So odds are the first reversal down is going to fail, and the risk is big. Traders will sell this close because they know the first reversal up is going to fail, and it's probably going to lead to a couple pushes down, which it did. But bulls are making money at every new low, therefore it's probably going to enter a trading range. Right here, what do bears do? Bears get out. Some bulls will buy. They're hoping it's a major trend reversal. They're expecting a trading range. So if they buy, they say, oh, bad follow through. That's not good. That's probably trading range price action. They say, oh, big overlap. Lots of overlap here. Bull bar closing on its high. Maybe a second entry. That's, better. Now we have a big bull bar closing over here. Now we have another bull bar, but it's rather disappointing. Oops. But it's a disappointing bar, so we're probably going to test back to down here, which obviously would happen. Then you say, okay, but it's a low one short, probably not a second leg trap, probably going at least a little bit higher. High one buy, okay, so we went at least a little bit higher, but we found sellers. Second entry short, so maybe a 50% pullback, maybe we'll test down to here, but we never trigger. We strong enough breakout, probably a surprise, testing the high of the day. Better if the bulls get a big bull bar, but it's always in long, okay? Bulls got the big bull bar, so now what? Well, probably a surprise going at least a little bit higher. Rather, we went quite a bit above the high of the day, so probably not a second leg trap, at least not yet. Third bull bar, okay? So always in long. So hypothetically, you could hold all the way to the close and you'll be around the same price. And you were. Here, why do we sell off that far? Well, we had 3 pushes up, 1, 2, 3. So the bulls, after this rally, technically it was 4 times, tried once, big outside down. Well, big bar. Tried twice, tried a third time, tried a fourth time. Couldn't get anywhere. So then the bears sold off and we went below the blow of the trading range and we turned up. So, I'm kind of veering off course here. But what I do want to say is the best thing I can tell you to do is make sure you're studying Al's video course. Make sure that you are in the webinar. Make sure you're watching the webinar, watching it carefully, looking at past recordings of the webinar, looking at questions in the webinar, asking Al questions, and really try to understand all the way in. Really try to understand that, hey, is this a second leg trap? Is this going to be an endless pullback? Well, I'm not convinced. To me, while this is strong, we have a big down, big up. This looks stronger than this pullback. So even if we pull back down to here, I think we'll still go up here. So for me to change my mind, I want to see bear bars closing on their lows. Why did we get a bear bar closing on its low here and then a doji? I want to see this bar close on its low, and then I want to see another bar close on its low, and then I'll start saying, okay, maybe we're becoming always in short. So, as far as understanding swing trading more, you just got to start trusting your own understanding of the market through Al's videos and throughout, learning and studying Al. And by the way, I don't mean to, I was checking on this trade. I changed it to a 50. Sometimes I'll trade a 15-minute chart if I'm not going to be watching it as closely for at least a little while. So I don't want to spend, if I'm trading a 5-minute chart, I feel like I'm constantly watching it when I don't really expect it to be. It may take a few hours to see what I want it to do. So I'm perfectly fine with looking at a 15-minute chart. I mean, I could even, if I want, look at a 30-minute chart, okay? And I might just do that. But I like 15-minute charts, so I like looking at 15-minute charts. Either 5 or 15-minute charts, mostly 5 minutes. But anyways, I would start with always in. Start with really understanding it. Start with really getting into that. But the next thing is, at some point it all clicks. At some point it just makes sense. And understand this, most importantly. Although Al may not be, when Al's looking at this, he's not selling, he's buying. When he's looking at this, he's not selling. When he sees this, he's buying. Now, he may be buying multiple times up. It's personality. Al would rather buy the close, scalp out, buy again, scalp out. Possible exhaustion, maybe not buy that close, maybe buy down here. So it'll all start to click more and more. Just keep watching the videos, watch prior recordings of Al from the beginning, and take notes. I don't have the problem is, there is really no easy way to answer this question. And that doesn't mean it's a bad question. It's just, it's kind of complex. Because it just gets into, okay, this gets into personality, it gets into understanding. If I look at a price chart and listen to what Al has to say during a specific swing setup, I find it difficult to take the trade. Well, you find it difficult because Al says this. He says, low probability, swing short, low probability, bottom of a possible trading range, tight channel, may find buyers below. And then you get this bar and then you go, oh, that's not good. Some traders, if they're smart, they get out and break even. So what you have to remember is, you got to remember that these kind of trades are, in fact, most of your swing trades are low probability. And we all know that, but we have to accept that. So, if you're taking a low probability swing trade, there's a 40% chance you're going to lose. So Al's going to talk about it in regards to, hey, 40% chance. So, I hope this video helps. If it doesn't, don't be down on it. Just think about what I'm saying. Look more at the videos. If there's first thing is, trading is all about, learning to trade is all about kind of narrowing, pinpointing the problem, okay? So if I'm having trouble with this kind of day, okay, what is troubling about it? Is it that I'm selling too late and then we're reversing? Is it I'm selling as this mark, I'm selling here but getting stopped out up here? Am I selling this close but letting it come all the way back against me? Am I selling too late, selling too early? Identify the problem you're having trouble with, and then, okay, start with trading ranges. Okay, let me look at the trading range videos. And then let me look at maybe the books, maybe the webinar. Now, I will say, if you've been swing trading more so in the, recently in the past few days, that's been a little tricky. Just kind of show you what I mean there. A lot of these days are just not good swing trading days. Each bear bar gets bad follow through. So it's a lot easier to buy below bars and scale in, or to, same thing over here, here. Sorry about that. Here, you go sideways, breakout, and you get this huge breakout, but then you rally back up. So, okay, I keep having to bounce back and forth. But anyways, just another note. A lot of times when you see this kind of stuff, remember that when you have a few minutes left into a bar, you get a lot of movement because traders are trying to influence what this bar is going to look like. If it closes when it's low, it's going to increase the chances the bears will take control. If it closes as a doji, it increases the chances as that it'll go sideways to up. If it closes the bull bar closing on its high, obviously it's better for the bulls. And why did this bar happen? Well, we tested some moving average. So again, I don't have a lot to really discuss. I will talk about the day real quick as a whole. So if you're having trouble, don't get down. Just keep studying, keep learning. You'll figure it out if you just decide that you're, make a decision that you're going to figure it out. Trading's frustrating. But while it's frustrating, the more you do it, the less frustrating it becomes. At least that's certainly how I feel. And, again, I am not much. I don't care for the whole psychology of trading. While I might be completely oblivious to all that, and maybe there's some piece I'm missing, I just don't find it that helpful. I think it's, for lack of better words, I just think psychology and I don't want to say that because that's probably saying the wrong thing. So let me restate what I'm saying. I think a lot of psychology in trading, I think a lot of it's abused and people profit from it because they sound smart with what they're saying about flowing and with the market, and I'm not hitting on anyone particularly. I'm just talking about the whole market wizard, in general psychology, the general market wizard books, all this and that. They just don't interest me. I like reading them. They're fun to read, but they don't interest me in terms of trying to profit from trading. If I really want to profit from trading, what I do is I look at Al's material, I read his books, I watch his webinars, I watch his videos. So let's look at the day as a whole. So first bar, and this is what Al does. First bar of the day, trading range bar. What does that mean? Sellers above, buyers below. Second bar, a doji, trading range bar. Make that a little less distracting. So probably buyers below, probably buyers at this close. If we get another big bear bar, traders will sell. Low one short, buyers below. Low two short, buyers below. Tight trading range, so probably breakout mode, getting a lot of bull bars, not getting great bear bars, so increases. Chance that we'll get an upside breakout. Here, a big outside down bar, but big bar, big risk. Tried to get a double top, but it's a micro channel, tight channel. Possible small pullback bull trend. Probably going higher. Big bar, follow through. Poor stop entry short. Probably buyers below, at least a little more up. Surprise bar. This was a high one buy, probably sellers above, but in fact we found buyers. Surprise bar, so bulls will buy the close. And what happened here? Well, the tail was so big that it probably was exhaustion. It was probably going to have sellers above. Look at a 1 minute chart. What do you notice? Oops, you went too far. You're going to notice surprise, a little more up, and we just turned down. Actually, that's even the wrong day. Whoops, I knew that looked kind of strange. Here we go. Parabolic buy climax. Here, here, here. Strong enough bull bar, odds favor second leg. Then we immediately found sellers. So bull said, wow, that's a surprise. Probably get a second leg, but I'll sell the second leg. And 3-4 bars down, second entry short. Bulls bought the close, disappointed, tried to get out of break even. In fact, they did get out break even. No, they didn't. I was wrong. So this is one of those few days where you buy the high close, you don't get out of break even. High two buy, but not that great. Big bar, bigger risk, tail on top, increase the chances of sellers above, possible tight trading range. You have an obvious target above, so bulls buy the close, scale in, try to get out of break even. They failed, so if we get back up there again, clearly bears are selling, and clearly bulls are selling, trying to take a smaller loss. Therefore, they may sell early as well. Outside down bar, another bar closing on its low, so probably getting a bear breakout below some sort of second interest short. You can do it like that. You can say it's maybe right here, which is probably more likely. You could say this close. It really doesn't matter. You just have to understand we're getting a bear breakout followed. They're probably going at least a little bit lower. 4 consecutive bear bars, 5 consecutive bear bars, probably going at least strong enough for a second leg down. But unless we get below here, it's probably trading range. So we get the second leg. And what happens here? Well, bulls say, it's a trading range. I'll buy here. I'll put my stop way down here, and I'll buy more. Well, 3 consecutive bear bars. Doji, doji, doji. Bulls buy somewhere over here, and they get out at the original entry. Or traders say, yeah, it's a bad buy. I won't buy above it, but I'll buy 4 points below it, or 2 points below it, or I'll buy somewhere down here. Or they'll say, okay, it's an implied double top. Well, it didn't quite reach it, but maybe the double top was from this high to here, and then we get down to here. It's trading range. I mean, it's all it is. It's trading range day. You get a bear bar, you sell it. You see a big bull bar here. Do you buy it? Well, you can, but we've also been arguably going up for a while. This is reversing the past many, many bars. This is arguably breaking out of a channel. So, anyways, that's all the time I have. I hope the always in question helped. If it didn't, comment below. Maybe ask a question over the always in or over Al's trading room that you find difficult. If you're finding difficulty in what he's saying and pulling the trigger and getting in, well, that might be due to lack of understanding in something. Maybe there's something you need to revisit. So anyways, hope this helps. Thanks for watching.